Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on euro currency. If we take a look only on the picture that we have here, you can see that situation barely has changed. Market mostly stands in the same trading range where it was standing yesterday. But at the same time, if you take a look in the other markets, you will see some additional information. And in general, we should not forget that yes, this ABCD pattern looks just great. We have good engulfing on the weekly chart, but we should not forget that this is just a retracement. So we're dealing with a retracement which is by its nature is not as stable as some trend directional performance. So that's why when you are dealing with the moment where you intend to take position on a retracement, this is always some tricky thing. So and there is actually no rule of thumb that could make you be spot on every time when you are planning to take the position. So you know this better than me. And from that standpoint of view, the performance that we see currently as on the euro currency, as on the market, as other markets, makes me think that well, investors now stands in the kind of the decisions. They start having some doubts on a short-term perspective, because the major thing that we've got yesterday is a result of the auctions on the 3-year bond in the United States. I have put the corresponding message in the Telegram, so if you'd like to see the charts, some numbers you could see. But shortly speaking, it was best auction from the, if we speak about the demand from the foreign investors in whole history. So foreign investors have bought approximately 78% of the all issue. This is really all-time high. What does it mean? It means that investors in general in midterm expect more dovish policy from the Fed as they start buying the 3-year bonds. As you know, we mentioned it a few times that actually the inversion of the treasury yield curve has disappeared. So now the longer term yields are becoming higher than the short term, and that's really important. And from that standpoint of view, this strong demand suggests that potentially it should continue. Hardly it will be just in one auction. Correspondingly, it will make the pressure on the yields. You already could see it if you take a look at the 10-year bonds. Auction was on the 3-year bond, but take a look what happened with the 10-year. It just collapsed. Grabbers have been completed, and we're going to the butterfly target. So this performance and auctions result makes me think that this is not just short-term occasionally move. In general, if you take a look even on the previous performance on the 10-year bonds, you could see what has happened, even from the higher levels, right? So it is in the beginning of the year. As was gradual downward action on 10-year bonds for a significant, almost for the whole percent. It's a very big motion. It means in the price of the bond, it's approximately 7% in notional value. This is big amount. So it means that this is not occasional, and that will make the pressure on the United States dollar itself, which is supportive for the euro. And that's why I am speaking about the trickiness of this retracement. Taking a look at the dollar index directly, you could see here the same thing. We do not see the collapse, but take a look at performance on the dollar is a bit different compared to the euro. We do not have here the new top, while on the euro currency we have the new bottom. It keeps the door open for a possible butterfly action here as well. Finally, if you take a look, I'm not sure this definitely happened, but we have to consider all possible moments. Besides here, the clear signs of the bearish dynamic pressure is rising. So you can see market stands flat while the trend stands bullish. Finally, if you take a look at the gold and the Great British Pound, here's absolutely perfect situation, because on the Great British Pound you could see that the actually ABCD has been completed. On the euro currency it is not yet done, but here it's already completed. Yes, we see here really fast acceleration down. Potentially we could speak even about some XOP target that Great British Pound might go lower. Yes, it's possible, but the fact is that this retracement is done. So now if you take a look at the euro currency directly, here is actually very interesting only with the hourly chart. That was our yesterday discussion. Here I have to adjust levels because market has created the new lows here. Yesterday we were speaking about euro right at this point. You could see that the pattern that we discussed has not been formed because in short we were watching for hand and shoulders and suggested that if retracement will happen, we will consider it for possible taking the short position downward continuation. This pattern has not been formed. Market just dropped lower. This divergence has been formed, so already is done, just because here is a new top between these lows, right? So I could even delete it. And now you could see that this bigger pattern might be formed, right? So we could get this shoulder, head, right arm with a potential upside action. The major dangers for this setup is existence of the confluence resistance around 1060, 1068. This is risk. This in fact makes the situation very close to the Judd Napoli oops directional pattern. When you have classical pattern, no matter what it is, hand, shoulders, double bottom, double top or anything, and you have strong confluence that stands between neckline and its major target. If you calculate approximately the target of this pattern, it will stand somewhere in this area. And by the Judd Napoli idea that this is the level that could reverse the direction, catch traders who are dealing with this classical pattern in the wrong direction, and push price to the moment where the stops will be triggered. So he considered this such a kind of levels for possible taking position against this pattern. So that's some ideas for scalp traders if you would like to do something here. So what we should do in the current circumstances, because in fact those who trade on a daily weekly chart, they are watching for a chance to take the long position. Could we speak about hand shoulders? Yes, we could. Could we speak about, for example, 3 drive pattern for deeper downside action that let market complete this ABCD pattern? Why not? This is also possible. So in the current circumstances, with taking into consideration the performance of the 10-year bonds, and that today everybody expects to the decimal point of the CPI growth, very small growth, potentially we could consider this hand shoulders pattern if it will be formed for trying to take the position. Alternative way to do with this current situation for the conservative trader is just watch for more clarity when this resistance will be eliminated, when this pattern definitely will be formed and start working, and so on. Maybe, as I said, it might be 3 drive or something. So if you're not sure and you're a bit worried about all this stuff and do not want to deal with the CPI numbers, it's no problem. We could wait because on a major trend stands on a higher time frame, on the weekly, and this is very small fluctuations for this trend. So if even market will break it all to the upside, moment will not be lost. So we just will take position on some retracement, but we definitely will know that we are going to the highest standing levels. That's only for those who are interested with the trading on intraday, watching for these patterns and like all this interesting stuff with these patterns that's forming around data releases and so on. So my personal opinion, that's, well, if indeed we will get clear hand shoulders shape, I see no problems in trying to take some position around this area. If even you will be wrong, market will drop, this will be very small risk, approximately 20 pips. So, but since this level stands for some distance out from the level where we could take position, if market will reach it, we already will be at the break even. So from that standpoint, it's not the problem. Finally, concerning this confluence, watch and treat it also as an indicator. If market will fail to break it up, dropping right back down, it means that we still could get another swing down. If upside breakout will happen, it means that this action may become for high levels, and it means that maybe the downside retracement that we have here on euro currency that's not completed yet, this ABCD, maybe is finished. So that's why this level is also very important. Sounds a bit messy, but that's actually, guys, the situation where we stand right now. Think about this stuff, decide what particular scenario you like more, and just wait for a proper moment for position taking.